Let's get in. The first of our guests on the show today on the equity side, Moshe Khatri. He's the MD of Equity Research, IT Services and Payments at Wedbush Securities with us on the show. Moshe, firstly, thank you for waiting patiently while we were just enumerating the 9 stocks that we typically do as anchors. But the first on the list undoubtedly was Infosys for us. What did you make of the results? More importantly, what did you make of the commentary given by the company?
Let me just start by correcting what you said. I'm actually MD in investment banking, not research. But
apologies,
in general,
apologies.
No worries. What we have seen in general is that considering the fact that this is a seasonally weak quarter for the group, every single company reported better than expected bookings. At least one of those companies raised guidance for fiscal 26, which is a bit unusual. I'm talking about Infosys, of course. And then if you take out one-time kind of items, margins actually look better than expected. So net, I would say that the group probably is outperforming relative to expectations. And remember, we've had 2 very tough years for the group in terms of growth rates that have slowed down. We've had a lot of concerns about the potential impact of Gen AI on both revenue growth and margins. And at this point, it seems that we may be heading toward some sort of an inflection point, looking at calendar 26 and fiscal 27 for the sector.
Moshe, morning. I'm asking whether you can extrapolate that and talk about the rest of the space, right? So Infi, the revenue guidance increase as well, certainly likely to be seen positively by the street. But you had LTTS that reported a mixed set of numbers. They say that they're going to be more selective in the deals that they're picking up. And so as a result of which, the top line is slower than anticipated. What about the rest of the space that you've seen so far? Are you more positive than not with the numbers you've seen?
I would say that what we are seeing in general from the tier 1 and tier 2 vendors that are based in India is that these companies are aggressively changing their models to adapt to this new Gen AI environment. What you will be seeing, in my view, you'll see a decoupling between headcount and revenue growth. You'll see more focus on performance-based contracts. And then on top of that, looking at next year, we are hearing that discretionary spending is going to look a bit better. And then on top of that, I think in general, we'll probably see margins looking better. And a lot of that is a function of productivity improvements and the fact that the model is going to change, as I said, with a more focus on performance-based contracts.
Okay. Moshe, now you've seen the 3 biggies come out with results. We've had some of the smaller names and companies are taking interesting twists and turns. LTTS, for example, has decided they are pruning back on some of the offerings in order to set the margins straight and long-term growth. Infosys is doing something. HCL Tech is sounding a fairly confident picture too. And there is a Morgan Stanley note today which says that IT budgets are being scaled down. Are you of the construct which believes that the bad times have turned or could be turning, or do you believe this picture is still sketchy?
When I was in India a couple of weeks ago, the feedback that I was getting is that calendar 26 and fiscal 27 could be an inflection point for the sector. Inflection point in terms of growth accelerating, that's number one. And then some vendors are also telling me that they're in a position to go back to customers and raise bill rates. And this is something we haven't heard for some time. So these are all, in my view, are positive indicators for demand trends looking into the next 6-12 months.
Hi, Tamanna here. And interesting to know you were in India. Next time you're here, please come say hi to us. We'd love to have you in studio as well. So extending that invitation out there. When you're looking at the entire landscape, are you liking the heavyweights, the large cap IT companies more over the next, say, 4 to 6 quarters? Or do you think that the mid-cap ones are looking more interesting? And what are your favorites here, if any, that you could name?
Yep. So a couple of things here. The areas that have really been growing nicely in IT services or tech-enabled services include companies that focus on product development, companies that focus on ER&D, companies with a healthcare focus, or companies that focus on energy tech. And these are companies that have done well during the past few years. What's interesting is that the companies, if you look at some of the US-based traded companies, there may be a few that are actually trading close to their year highs. Huron, for example, is probably one of those companies that's trading close to its year high. They're growing about 10% a year. And again, their model is very much related to what we do in Gen AI. Same thing with EXL that does a lot of work in data. The large cap names are doing a great job on adopting. And I think the way we see it, growth should go above 5-6%, I would say 6-12 months from now. So we should see that scaling of Gen AI projects driving growth. And in their case, we're also going to see a lot of the large contracts on the cost takeout space really kind of, I would say, translating into revenue growth to converting into revenue growth. So that part of the business, in our view, we'll see top line growth accelerate. The smaller cap names, these are companies that focus more on digital or data or maybe even Gen AI. These are the companies where we'll probably be able to show you better growth, north of 10%. In India, for example, Fractal will probably go public. This is a company that should be able to get you 20-30% growth, top line growth. They're focused primarily on Gen AI. So you really, if you look at the space, you have to categorize these companies by what they focus on and how large their revenue base is. But you should see, anywhere from 6-10% growth for the larger cap names, and then smaller cap should actually do better than that.
Moshe, thanks so much for joining in and for that perspective, invaluable for us this morning. Thanks so much.